Hey YouTube, welcome back to My Financial Focus. In this video, I'm going to be talking about NIU technologies, and I'm also going to be doing an intrinsic value analysis of NIU by using a discounted cash flows model that I created in Microsoft Excel. So I'm going to figure out what a good buying price would be for us from a value investing perspective based on NIU's current cash flows. And I'm also going to be talking about some of the recent news surrounding China's economy and why it's causing some investors to get a little skeptical in terms of investing in China at the moment. So if you're new here, be sure to leave a like on this video, comment down below what you guys think of it after it's finished, and let's get started. So NIU Technologies, for those watching this video who don't know, is essentially a company that creates and sells electric scooters. So these are their products right here. As we can see, they have different series of electric scooters and electric bicycles. And along with selling electric scooters, their primary sources of revenue also come from their lifestyle brand accessories, as well as their NIU app, which essentially provides like customer service for their clients to provide a better customer experience for people who buy the NIU scooters. They currently sell them worldwide, so they've expanded into Europe as well as China and different areas of the world. So expanding internationally is one of the main ways that they are trying to grow in the near future. But one of the main things that's deterring a lot of investors, specifically American investors, into investing into NIU and in China as a whole is the recent CCP regulations that have been going on in China. Some examples of this include China's tutoring ban, as well as some of the macroeconomic conditions surrounding Evergrande in China and whether or not they'll be able to continue to pay their bond payments or default, which could cause something similar to the global economic crisis that happened as a result of the Lehman Brothers in 2008. So it's a pretty big deal, and it's something that investors are definitely keeping their eye on. And recently, they've been talking about how the CCP has made it clear that they might start forcing some Chinese companies to delist from the NASDAQ. So this is one of the things that caused Alibaba's stock to hit a record low on Thursday. And that was mainly because of fears of China forcing Alibaba to delist their American depository receipts. And obviously this extends to all Chinese companies and big tech companies like Tencent, DD Global, Pinduoduo, and also NIU Technologies. So that's probably one of the biggest risks that's deterring a lot of the current investors from investing in China's market, along with, of course, the Evergrande defaulting situation. So now what I want to do is I want to go into NIU Technologies' financial statements so that we can get a better understanding of their financial health. So I'm going to start with page 78, which basically gives us a breakdown of their revenue by product. So we can see based on each series how much revenue or how many units they're selling of that particular series. And so these are their electric scooters, and we can see that most of their electric scooters in 2020 came from their newer UQI series, so that's good. And then on page 80 we can see how much of their revenue comes from each revenue source, so their e-scooter sales, their lifestyle brand accessories, as well as their NIU app service revenues. And we can see that the majority of their revenues, pretty much 87, almost 90% of their revenues comes from their electric scooter sales, and that's been pretty consistent from 2018 to 2020. So I think that diversifying their revenues is going to be an important part of reducing their risk in the coming future in terms of their income. And then on page 136, we can see their balance sheet, and I'll zoom in here a little bit so we can get a better look at it. We can see right here that they have a growing number of total current assets over the years from 2019 to 2020. This is their total current assets listed in yuan, which is Chinese currency, and then this is it translated over to US dollars. So 1.5 billion yuan and then $237 million for 2020. And we can see that their total assets come out to be $283 million in 2020, and they're sitting on total liabilities at the moment of $130 million. And so that leaves their total equity at $152 million for the year 2020. Also, we can scroll down here and get a look at their income statement. We can see that they don't have the best gross margin out of some electric vehicle companies, as we can see right here. They have revenues of $374 million in 2020, and then their gross profit came out to be $85 million. So it's decent, but there's obviously some room for improvement. And I think one of the ways that they can improve in that regard, and one of the ways that they spoke about how they would grow their business strategically in this annual report, is they wanted to focus mainly on expanding internationally into countries with favorable governmental policies like Europe. And they also wanted to grow their business faster, because the more they grow, the more leverage they'll gain with their vendors for their raw materials that they use to build their electric scooters. And once they are able to have more leverage in those conversations, they can bargain more and they can negotiate lower contracts for their costs of revenues, which will obviously increase their gross profits. Also, for their revenues, growing their revenues right now, as we can see with their net income, their bottom line is pretty small relative to their total revenues. So growing their revenues in the future, they're going to want to grow their NIU app services as well as their lifestyle brand more, because the stronger their brand is, the harder it'll be for their competitors to take their market share in the future. And then lastly, when I scroll down here, we can see their statement of cash flows. There are a lot of different entries here, but I'll just sum up the main ones. The net cash provided by operating activities for 2020 was $71 million, or 465 million yuan. And then we can see from their investing activities, they invested about $82 million in 2020, mainly from what it looks like in purchase of short-term investments. And then also from their financing activities, they used $2 million, and that came mainly from repayment of short-term bank borrowings. And then proceeds from short-term bank borrowings also made up most of their financing income. And then lastly, what I want to look at after this is page 180, which basically shows a breakdown of their revenues by geography, as we can see right here. And so expanding internationally is definitely something that they're going to focus on. We can see that a lot of their revenues are coming from China at the moment. And then their second largest customer by geography is Europe. And then so they haven't even really expanded much into America yet. And that's obviously a pretty big opportunity for NIU in the future. And the last thing that I want to do is use my discounted cash flows model to figure out the intrinsic value of NIU Technologies. And I'm going to do that by getting a couple of values from Yahoo Finance and TradingView. So we can see right here for their growth rate, I got that from the analysis tab in NIU Technologies. If I scroll down, we can see that their growth estimates for the next 5 years is about 6.25%. So I just kept that consistent for years 1 through 5 and for years 6 through 10. And then for the year one free cash flow, I got that from TradingView just by going to their cash flow section, and then scrolling down, we can see for 2020, it came out to $51.27 million. Their net cash minus net debt, I got that from the statistics tab in Yahoo Finance, which we can see right here, total cash $1.53 billion and total debt $157 million. Their stock ticker is NIU, and shares outstanding I also got right from here in Yahoo Finance, 76.28 million shares. And after plugging in those values, we can see that the intrinsic value per share based on NIU's current projected growth rates and their current free cash flow comes out to be $11.52 per share, which relative to their current share price would make it seem that NIU Technologies is currently overvalued, sitting at about $20 per share. And a 30% margin of safety that we would want to buy in at is $8 per share, and then 50% would be about $5.76 per share. So let me know what you guys think about how NIU is currently valued. It's currently sitting at a market cap of about $1.54 billion. So let me know if you guys think that it's currently overvalued or undervalued or perfectly valued. Also, let me know what you guys think about investing in China as a whole, because clearly at the moment there's a lot of news surrounding the uncertainty about China's market and economy in terms of an investment. So I'd love to know what Chinese stocks you guys are holding on to, or if you guys are investing in China at all. I know that there are a lot of bigger investors like Charlie Munger who have a very bullish outlook on China, but then there are other investors like George Soros and Chamath Palihapitiya who are thinking that China might be a little bit too risky for them at the moment. So definitely let me know. Leave a like on this video if it provided you guys any value. Subscribe to the channel if you haven't already, and I'll see everyone in the next one.